stocks finished at more than 3-week highs on Tuesday as investors cheered a raft of largely upbeat corporate earnings reports. The Dow Jones Industrial Average rose 0.9%, the S&P 500 Index gained 1%, and the Nasdaq Composite Index advanced 1.2%. The third quarter U.S. corporate earnings reporting season kicked off on Tuesday. JP Chase & Co. reported revenue and earnings that rose more than expected, while Wells Fargo & Co. reported a surprise increase in revenue, though its third quarter profits fell more than expected. Citigroup Inc. reported quarterly sales and profits that beat expectations, while Goldman Sachs Group Inc. reported a steep 26% decline in profit from the year-ago period. Asian stocks were mixed on Wednesday amid cautious Brexit optimism due to news that the EU and the UK were close to a deal after positive comments from European negotiator Michel Barnier, with reports that a draft legal text was being drawn up. Against this backdrop, global investors shrugged off a warning by the International Monetary Fund that the U.S.-China trade war will cut 2019 global growth to its slowest pace since the 2008-2009 financial crisis. Meanwhile, China threatened to retaliate if the U.S. Congress passes a bill offering support to pro-democracy protesters in Hong Kong. Japan's Nikkei 225 rose 1.2% to 22,472.92. In South Korea, the Kospi rose 0.71% to 2,082.83. South Korea's central bank cut its interest rates for the second time in 3 months on Wednesday. The Chinese Shanghai Composite was down 0.41% to close at 2,978.71, and the Shenzhen component declined 0.4% to 1,635.3. Hong Kong's Hang Seng rose 0.63% despite fresh political unrest in the city. European stocks traded without any real direction on Wednesday as investors were seeking guidance on the likelihood of a Brexit deal between the UK and the EU. The Pan-European Stock 600 slightly paired early losses to end the session just 0.05% below the flat line. On the data front, UK consumer price index inflation for September roughly matched analyst expectations to grow 1.7% year-on-year, while Eurozone CPI rose 0.4% on the month and 0.8% on the year. Italy's EU harmonized inflation rose 1.4% month-on-month last month. U.S. retail sales dropped in September by the largest amount in 7 months, possibly signaling that rising trade tensions are having an impact on consumer spending. Retail sales fell 0.3% last month, following a 0.6% gain in August, the first decline since a 0.5% drop in February. The probability of an October interest rate cut by the Federal Reserve rose to 90% after the retail sales data was published, up from 78% earlier. U.S. stocks slipped on Wednesday after U.S. retail sales fell, offsetting a good start to the third quarter corporate earnings reporting season. The Dow Jones Industrial Average closed down 0.1% at 27,002.52. The S&P 500 lost 0.2% to finish at 2,989.69. The Nasdaq ended with a loss of 0.3% at 8,124.18. In currencies, the dollar was lower against major rivals, with European currencies rising amid some positive Brexit headlines. The GBP USD refreshed highs around 1.2875 to finish at 1.2825. The Euro US dollar jumped to 1.1085 and preserves its positive tone this Thursday morning. Meanwhile, Brent crude was marginally higher on the day, with the futures having settled around the $59 handle. The prices had to trim gains after API data showed a larger than expected buildup in stocks in the United States. U.S. crude inventory soared by 10.5 million barrels to 432.5 million barrels last week versus the increase in 2.8 million barrels expected. On the other hand, hopes of a potential U.S.-China trade deal helped offset oil prices losses after Mnuchin said U.S. and Chinese trade negotiators are working on nailing down a Phase 1 trade deal, text for their presidents to sign next month. That is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.